Thank you very much for joining us this afternoon. My name is Susie Luckman, and I am a legal director at VWV. I lead the VAT task force here, which is a multidisciplinary team of solicitors, accountants, tax advisors, and school advisors. I'm joined today by Nikki Miller, who is proudly not a lawyer, but an accountant and a school advisor, and who has 15 years hand-on experience working within independent schools. I am also thrilled to be joined by Steve Hodgetts, who is as close to a VAT celebrity as possible. Steve has worked in VAT for more than 30 years and was a partner at RSM for 25 of those, where he led the delivery of VAT advice to charities and education providers. He is now semi-retired, working with Cubed Tax in his support of the independent school sector. He has successfully represented schools in dealings with HMRC, including taking disputes to tribunals. We're hoping that this webinar provides practical rather than just legal or financial guidance to schools who are getting to grips with what VAT will mean to them. So a quick rundown of what we're going to be discussing today. I will start with a quick look at VAT from a governance perspective. This is a significant change for schools, which creates potentially material risks. Once we have looked at these, I will then run through some simple and hopefully comfortingly familiar tools that schools can use to mitigate these risks. I will then hand over to Steve, who will get into some detail and talk to you about registration and timing, including pre-registration input tax. Steve will then look at some of the hot topics of the moment since the budget, being single and multiple supplies, exempt supplies, and then leading on to partial exemption. Steve will also talk about trading subsidiaries and some food for thought on how you might structure your schools in the new VAT world. Nikki will talk about the practical side of implementation within a school setting using her hands-on experience. And you'll then come briefly back to me before we turn to questions. Next slide, please. So as you will all be painfully aware, VAT policy is now in place. It's going ahead for the 1st of January. It is happening, which means the time for planning and modelling what this might look like is over, and we all just have to get our heads down and get this work done. There are, of course, the various legal challenges in the work. However, such challenges take time, and the 1st of January 2025 is only 6 working weeks away. In practical terms, you will be working to a much tighter time period than that because you will be preparing to send out your spring or Lent term invoices. And in fact, some of you might normally be sending these out in the next week or so. But this term, before you do that, you will need to have registered for VAT if you're not already registered and have fully analysed all your income to attribute the most appropriate VAT treatment to that income, and then representing that in your invoices. And VAT is a self-assessed tax. So schools will need to make their own decisions about what VAT treatment to apply. And there is a great deal of conversation at the moment on the sector-specific aspects of school business. And I am, of course, talking about school lunches, nurseries, transport, after-school clubs, 16 to 25 provision. And opinion on how to treat some of these items can differ between advisors, can differ between the published guidance and individual correspondence with the Treasury. And ultimately, it looks like we are unlikely to get one hard and fast rule on these supplies. It is actually a feature of VAT principles that often the correct VAT treatment of a supply will turn on the individual facts of that setting and that supply. Internally, we call these the Jaffa Cake items, which is a reference to the 90s case where a tribunal had to determine if Jaffa Cakes were in fact cakes or biscuits, because cakes are considered staple foods and zero rated for VAT purposes, but chocolate biscuits are luxury items that attract VAT at the standard rate. And if it takes a tribunal to determine the true nature of a Jaffa Cake, it is a tall order to ask a school finance team to unilaterally assign a VAT treatment to the myriad of services that schools offer, especially on the basis of guidance that does not acknowledge the sector-specific nuances of school life. Jaffa Cakes, by the way, are considered cakes. Another Jaffa Cake situation that we have been talking about is when Jaffa Cakes were involves Pringles. Pringles were in the spotlight in 2008 when the High Court determined that they contained so little potato that they were not in fact crisps, and they were therefore exempt from VAT. Good news for Pringles. However, a drama then unfolded because HMRC challenged this, and the case ended up in the Court of Appeal, where the original decision was overturned, and Pringles were deemed to be crisps after all. And as a result of the Court of Appeal's decision, the maker of Pringles was faced with a VAT bill in the tens of millions. Fortunately for them, they had chosen to continue paying VAT during the appeal process to avoid the risk of an enormous bill if the decision did not go their way. But this case highlights how difficult assigning an appropriate VAT treatment can be. Legal professionals were paid thousands of pounds, tens of thousands of pounds, to argue whether a Pringle was a crisp or not. And 3 judges in the Court of Appeal then overturned that decision. So if you are having trouble grappling with the VAT treatment of after-school clubs, you can cut yourself some slack. This is complicated. That being said, all of this uncertainty leads to an increased risk for schools. From a governance perspective and from a strategic perspective and from a practical perspective. So in addition to preparing for the practical impact on your invoices and your ledgers, you also need to be considering how to manage this risk. This is a new area of law, and gradually we will gain case law of our own that's specific and potentially updated guidance over the months and years to come. As that case law evolves and schools are challenged by HMRC, schools should remain vigilant to keep up to date with the legal precedent as it develops. Until then, it will be the schools themselves who make these difficult decisions. And HMRC is not going to query your decisions on your partial exemption calculation first thing in the new year. Again, VAT is self-assessed. So those queries or investigations will happen months or years in the future after you have been applying these principles for all of that time, by which time underreported liability will have accrued and could result in an unexpected and material tax bill. Plus, of course, any interest or penalties. Next slide, please. So what can schools do? The easiest place to start is ensuring that you have effective governance and oversight. For governors, this is twofold. Has VAT compliance been added to your strategic decision-making process? Does your future strategy now involve VAT implications and risks for your school? And then secondly, governors will be asking themselves, how do I know that we are compliant? What are the headline areas we need to be addressing? And do the relevant people have everything that they need to tackle this? In essence, do we have a plan to follow and also to demonstrate the steps that we have taken to prepare? For charitable trustees, the focus is likely to be slightly different. Trustees will be looking at discharging their charitable duties to protect the charity's funds and assets. So we'll be looking at implementing risk management strategies to identify and then mitigate these risks. Of course, these must also be realistic and reasonable, and trustees may be asking themselves how they can demonstrate the steps that they have taken. We consider the easiest way to capture your risk management process is to update your corporate risk register, and this is something that we have been helping schools with since September. Another easily identifiable step is to ensure everyone is clear who has authority to make unilateral decisions on VAT or when board approval may be required. Do you have a clear scheme of financial delegation for decisions around applying VAT? Alongside this, you should ensure proper decision-making protocols are clear and being followed. For example, is there a record of the clear commercial justification for a decision? Or is the decision in line with professional advice you have received? Is this all being minuted? When HMRC carry out their visits and inspections at their school, and they only give you 7 days notice, is it going to be easy to access the commercial reason for a decision which may have ultimately had an impact on the school's overall tax liability? And as with any new system or process, we recommend an ongoing system of monitoring and review. Even once these policies are embedded, governors would be wise to undertake a periodical internal or external review of them to ensure the procedures remain adequate and appropriate. That's all from me for now, so I will pass you now over to Steve.
Good afternoon, everyone. Let's start by looking at VAT registration, given that the law is now in place. So for those schools that are not registered for VAT, you must register for VAT at any time if you have reasonable grounds to believe your taxable turnover will exceed the threshold of 90,000 in the next 30 days. Don't forget, taxable turnover includes registration fees received after the 29th of July of this year. So, for example, if you issue your fee notes on the 1st of December and expect 90,000 of income to be received in December, at least 90,000 of income, you have an obligation to register for VAT from the 1st of December. If you do not expect to exceed 90,000 in December, you do not need to register until the 1st of January, when I assume you would expect to receive more than 90,000 of taxable income in January. So in effect, your likely date of registration will probably be before the 1st of January 25. Next slide, please. So there is some upside in registration in terms of retrospective reclaims of VAT. So this VAT is recoverable retrospectively. It's the last 4 years for goods. Obviously, the goods still must be on hand. Fixed assets, for example, minibuses and computers spring to mind. And last 6 months for services. So the services must not have been consumed, and they must be of value or of use for the future taxable use. HMRC has asked for an apportionment in their guidance of pre-registration exempt use on a fair and reasonable basis. And Suze has already mentioned it's self-assessed tax. You do not need permission to do this. Their historical guidance, which is still extant, actually says for fixed assets, you do not need to make an adjustment for previous exempt use. So that's an interesting difference between their current schools guidance and their long-standing advice for businesses generally. Now, the next point is a big point. It's an important point. VAT is not recoverable retrospectively on capital goods, primarily buildings or sports facilities costing more than 250,000. That's because it's covered by the capital goods scheme, which is essentially a 10-year adjustment period. Next point, please. Next slide, please. So, given that capital goods cannot be recovered retrospectively, and given that you have a cap of 6 months and 4 years on recovery of day-to-day expenditure, consideration should be given to retrospective registration. Why would you register for VAT retrospectively? Well, you'd register for VAT retrospectively if you could recover more VAT on expenditure than you would actually pay to HMRC on income during the period of registration to, for example, the 31st of December 24. The reclaim could be significant in respect of capital goods. That's because if you apply a look forward principle, clearly, if you've incurred capital goods in 2024, from 2025, you can have 9 years of taxable use of those goods. So you could be looking to reclaim in the current VAT year, which would normally end, by the way, 31st of May 25 for most schools, as that matches the quarterly periods of August, the normal fiscal year end. So you could be looking to reclaim 90% of the VAT on a capital item come 31st of May 25. So it's an important issue. One other thing to bear in mind is group registrations cannot be backdated. So it would have to be a single registration of the school itself. Next slide, please. We have seen quite a lot of commentary recently on this single or multiple supply issue. Single supply has a single VAT liability. Each component of a multiple supply has its own liability. This is particularly relevant to meals, which I'll just talk about a little more in a moment. A separate supply must be distinct and independent. This is what case law says to us. HMRC say a separate charge for meals would normally be a separate supply. But the matter has become confused lately due to toing and froing with HMRC, where now the question of optionality has been introduced. Optionality does not determine the legal position. You can have a multiple supply which has a single price and a separate charge is not made. So we now are in a position of difficulty of understanding what the position is. But let me say that the legal position is strong. What is the intention of the legislation? I would suggest it is clear that the legislation is intended to exempt closely related supplies, such as meals. It would have been very easy to tax all sales to pupils, but we do have closely related supplies which are exempt for VAT. I would expect us to hear a little more about this in the next month or so. Next slide, please. The first point on this slide could be the subject of a webinar in its own right. This is the law in respect of care and welfare. The care or protection of young children by a charity or state-regulated body is exempt from VAT. That law hasn't been changed. It's not superseded by the education law. It stands on the statute books. And if your particular circumstances are such, you can apply that law. Now, we know it will apply to nurseries and we know it will apply to after-school clubs, but it may well apply in other situations. And it will depend on the facts, and all schools will have slightly different facts in respect of this particular issue. We know that goods and services closely related to education are exempt. We've already spoken about that. Meals, transport can also be zero rated if the vehicle can carry more than 10 persons. So that's a positive. Zero rated is don't pay VAT on income, but you get your VAT back on cost. You will hear a lot more about the provision of sport if you provide sports facilities. This is because it hasn't received a great deal of publicity in the mainstream as yet. But there is an exemption for sport in a non-profit making environment. And those schools that have been letting their facilities to the local community in recent years have been applying this exemption. Now, HMRC say extracurricular activities are subject to VAT. Well, I would say applying their own optionality argument, which has been introduced in respect of meals, if the extracurricular activity is entirely optional and it's the provision of sport, why is it not exempt from VAT? I think it probably is. And I expect we'll hear more about this. Some lettings are also exempt from VAT, particularly basic room hire. If you provide catering and other facilities with lettings, it becomes taxable. Why are exempt supplies important? Exempt supplies restrict VAT recoverability on attributable costs. So you need to understand what is exempt and what is not, and how that affects VAT recovery on attributable costs. Next slide, please. So that brings us on to partial exemption. So what do you need to do on partial exemption? And you can be doing this now. Partial exemption is the recovery of VAT or otherwise on expenditure, VAT on expenditure. So as a minimum, you are going to need 3 codes on the purchase ledger. You're going to need a taxable code. If a cost is attributable solely to taxable education, it is recoverable in full. It is not partially recoverable. So, for example, if you incur costs in respect of the classrooms, it's fully recoverable. If you incur costs on an exempt activity, it's wholly irrecoverable. So if you refurbish the nursery, for example, those costs are wholly irrecoverable. And of course, there is a residual pot as well, which is partial. It's often called the pot, and it relates to overheads. So that will be a large pot very often in a number of schools. And the way in which you recover the VAT in that pot is taxable turnover over taxable plus exempt turnover times 100, and a percentage can normally be rounded up. Exempt input tax is irrecoverable. There is a small de minimis level, which if your exempt income input tax is less than 7,500 and less than 50% of your total input tax, you can recover all of your VAT, including the exempt input tax. So you can see it's quite important to understand what is your exempt income, how will it impact my recovery, and how you actually attribute VAT on your expenditure. Next slide, please. So I've just mentioned we restrict VAT recovery on costs. So what do you need to think about then if that's an issue? Well, you could consider ring fencing some activities and applying for a partial exemption special method based on sectors, because essentially your nursery income is bringing down your overall recovery on areas which are predominantly used for taxable education. So you could apply for a fair and reasonable partial exemption method. For example, on your sports facilities, you do not want your nursery to influence the VAT recovery on your sports facilities. So you could apply for a method based on the hours of use of the sports facility between the school, which is taxable, and between the community, which, as I've mentioned, in the vast majority of cases are exempt. So special method is particularly relevant for capital projects. Alternatively, you can use the partial exemption override. We've heard quite a lot of negativity about the partial exemption override in terms of fees in advance and how that will impact VAT recovery in the future. You can actually use the override to your advantage if your normal method of VAT recovery based on turnover does not actually produce a fair and reasonable result. As I mentioned earlier, most schools will be working to a VAT year end of 31st of May. So it's still possible to agree a partial exemption special method for the current year, i.e. the VAT year 1st of June 2024 to the 31st of May 25. Next slide, please. So finally, you could use your separate trading company to disaggregate or disassociate your exempt activity from your taxable activity. Exempt body does not need to be VAT registered. So you could hive down, for example, your nursery and your after school clubs into a trading company which was not VAT registered to protect your VAT recovery in the school. Lots of issues connected with this, obviously, which are not within the scope of this webinar. Charitable schools should recharge any costs to a non-charity. Charitable schools should not subsidise a non-charity. That's why many schools and their trading companies are registered for VAT as a VAT group. So you need to look at all these issues in the round and decide on the optimum position for your particular school. So now I'm going to pass you on to Nikki.
Thank you, Steve. And good morning, everybody. I'm going to touch on some operational issues. As Susie said, I'm a management accountant and I'm currently mentoring a number of school finance staff as they prepare their finance systems for VAT from the 1st of January. And what we're finding is that even for those who are already VAT registered, charging VAT on education is a big change, and it's a lot of work for finance staff. And we thought it might be helpful to share with you some of the implementation issues the schools we are working with are facing and how they're dealing with them. So my first point is that HMRC are clear that record keeping is important. And given the complexity of the initial VAT setup, and that many of your VAT decisions will be risk-based and made on the balance of probability, we would encourage schools to record the steps they take, the decisions they make, the reasons for those decisions and the advice taken. And this will enable you to provide evidence to the revenue in the event of any dispute on VAT treatment at a later date, but also to help satisfy the wider duties that Susie mentioned earlier. And I put implementation plan on the slide because using an implementation plan is a really good way of doing this and providing relevant information, but also to help guide your team through the steps that need to be taken to achieve VAT compliance. My second point is ledgers, analysis of income and expenditure. So things that are normal for independent schools aren't normal for VAT registered businesses. And by this, I mean, for example, the interplay between education, health and care, or the topical question mentioned earlier of school lunches, not to mention the various other complex issues we're all grappling with. And it's these issues that take some elements of your school fees outside the scope of VAT or creates this partial exemption. The partial exemption means that operationally, when you're actually managing the ledgers, you can't just tick a box and add VAT to your fees. It's just not going to work like that. Not only do we have different rates of VAT, but we also have multiple supplies which require different VAT treatment, and each line in your trial balance will need to be assessed on a line-by-line basis to reflect this. Setting up the nominal ledger so that it can account for VAT will require you to allocate different VAT codes to each nominal code, and only by doing this will you be able to prepare the VAT return ready for submission to the revenue. I'm conscious that many schools may have thousands of lines of account code, but we still encourage you to go through this analysis of both income and expenditure and assess each of your taxable supplies individually to determine the correct VAT treatment and then assign the appropriate VAT code. To reassure you, I have done this with a few schools now, and once you get going, it really isn't that bad. The easiest way to do it is to download your trial balance, add columns for each of the different rates, and then it's simply a ticking exercise. Well, you've got to analyze each line item, but then put a tick in the appropriate column to record the treatment and make sure you record in the comments box what you did and why. Once you started, it's likely you will emerge with a set of questions. And of course, bearing in mind this is a tax which required a court judge to determine whether a Pringle is a crisp, and even once he decided, it had to go to appeal. But what this means is that deciding whether school lunches are exempt VAT or not doesn't have a straightforward answer. And we therefore recommend that you have an additional column for these, we're going to call them probably Jaffa cake items in Susie's terms, but a to be confirmed column on your I&E analysis so that you can take it away and get it underpinned by proper advice. You may want to determine, for example, how to define a disbursement on the basis that if it's a disbursement, you don't need to charge VAT. And you would just code it as outside the scope or exclude it from your partial exemption calculation. You may want to be thinking about how to treat school trips. I'm going to defer to Steve to confirm this when we get to questions, but my understanding is that if your income from trips is less than 1% of turnover, you don't need to apply the tour operator margin scheme. So consider whether this is material for your school and what treatment, VAT treatment you should apply. Other queries which may emerge might be around the tax treatment. Perhaps your pupils have OPRO mouth guards. Those will feature in your ledger. How are you going to treat them? Hire of musical instruments, the charges for CCF, or perhaps music accompaniment for exams. They all sound like small things, but they all need to have a VAT treatment assigned to them. Some of the decisions on the VAT treatment you apply to individual supplies may be material, for example, school lunches or fees in advance. So please reassure yourselves that these decisions have been made at the appropriate level in the school and underpinned accordingly with specialist advice as and when required. Please also record the decisions for your decision. Please also record your decisions. Turning to expenses, you may wish to think about how to prepare the purchase ledger for the 1st of January, and on the basis that you can only reclaim VAT you incur on the goods and services you use to make taxable supplies. And Steve's already mentioned you'll need at least 3 VAT codes, recoverable, irrecoverable and overhead. This will make sure that you are not recovering VAT that you're not entitled to reclaim. The I&E analysis will help you perform your partial exemption calculation, and details of how to do it are on the HMR website or from your specialist VAT advisors. Just a few words on VAT codes. Steve and I were both talking freely about VAT codes. So VAT codes record the VAT rate applicable to goods and services in the UK, and they help to determine the correct amount of VAT payable on a different transaction. They also play an important part in categorising your school's activities for VAT purposes. Understanding and applying correct VAT codes helps ensure compliance and avoid penalties. HMRC VAT codes are typically alphanumeric and are used to determine the amount of tax due. So, for example, you might see VAT code S, S for Sierra, so S is the standard rate, which should be set at 20%. I've worked with a couple of schools where we've seen this set at 17.5%. So please do check the VAT codes. R is the reduced rate of 5%, Z is 0, and so on. It is our experience that schools aren't used to using VAT codes. So if you haven't found them yet, you may wish to investigate your finance system and review them. Getting the code set up right now will pay dividends later on. Short-term pain, long-term gain. Yes, I'm afraid this is, we just described it as grunt work earlier. It's just work that's going to have to be done, this line-by-line analysis. Gathering evidence. So Steve has spoken about the capital goods scheme and pre-registration expenses in the context of VAT recovery. I don't want to add to that, but other than to say that the practical steps you can be taking now is going through your records and starting to get all the evidence you would need to support claims for each of them. And that may take some time because we could be going back a few years. Invoicing. So there's been a lot of discussion about fee invoices and whether they are a VAT invoice or a request for payment. HMRC seems to suggest that schools will be issuing VAT invoices, but since the fee payer is the end user and can't pass on the VAT, we are not clear as to whether they should actually be a VAT invoice or a request for payment. There'll probably be more to follow on that. And so to sum up from me, there's going to be a short-term, I'm going to call it a hump. There's going to be a lot of short-term work for the finance team to achieve VAT compliance, focused mainly on this line-by-line analysis for the accounts. Having a clear plan which sets out the steps to follow will not only help the team achieve this by 1st of January, but will help provide a record of the decisions which were made and why. Our message is that these are important decisions that carry an element of risk and that school staff need to be clear on the extent to which autonomous decision-making is delegated and where responsibilities for any grey areas sit. Given the risks, we would ask you to consider your arrangements for ongoing monitoring and review. That's it from me, and I'm going to hand back to Susie.
Thank you, Nikki. So just two more thoughts before we move on to questions. We're aware that many schools have parental bodies that are full of creative and innovative people who may be looking for ways to ease their personal VAT liability. And that might include encouraging third-party companies who've perhaps not previously been involved in paying school fees to now become involved. This is quite tricky because at no point should a school ever offer tax advice to parents. But it is important for schools to remember that VAT is a pass-through tax. It is the intention of the legislation to pass through the school to the end user, which in schools' cases will be parents and carers. So this links to the point that Nikki just made about the type of invoice. We recommend that you are alert to the intention of VAT and that any third-party arrangements for fees are fully compliant on this point, and that your documents couldn't be used in a way other than you would wish. And then finally, corporate review. This is not a point for right now, but we do recommend that once the dust has settled in the new year, you diarise asking your legal advisors to undertake a corporate review at some point in the next 12 months. This is related to the points that Steve made in relation to existing trading subsidiaries or potential hive downs in the context of providing exempt supplies, but also, and also recharging services within your group now that VAT registration is a reality. It's likely to become increasingly important to take a holistic view on your group's tax and corporate efficiencies. But as I said, it's not for now, it's for the diary. Next slide, please. Very quickly, I can't imagine that anyone hasn't yet been to the HMRC website recently, but this has to be top of the list of available resources to you. It's free. You can register for VAT online services, explore the community forums, and attend the abundance of webinars there. There's also, again, an abundance of advice on the various sector association websites, which is well worth a look. Cubed tax. If you are looking for VAT advice on a specific issue or worried about a VAT process, you're unlikely to do better than asking Steve Hodgetts, and his contact details are on the next slide. And then finally, the rest of the points on this slide are resources that VWV has pulled together and has been advising schools, has been helping schools to implement their VAT. So an implementation plan, a VAT matrix, the mentoring service that Nikki mentioned, and an assurance review, although that's really for not before January, that's for after. Next slide, please. So here we have some of the people in the VAT task force and also Steve's contact details. So these are available to you. Right, shall we have a look at some questions? So, got a question here about school trips. Oh, it's just moved. Is the VAT treatment on school trips 1% treatment per trip or for the trips totaling for the financial year or tax year? Steve, I think that's probably for you.
It applies to the year. There are other conditions attached to it. My general advice to schools in respect of school trips is don't worry about it, because your exposure is only on the margin anyway. So what I'm suggesting to schools is you code all trips as outside the scope, both on the input and on the output side, and you don't feature it in any of your VAT calculations. As I say, the risk is minimal because you only have an exposure on the profit margin. But the main point is you cannot recover VAT on expenditure. But maybe that might mostly be zero rated transport anyway. But that's the main point. The 1% does apply, but there are other conditions. So we could look at that if you thought it was a big issue.
Thank you, Steve. I've got another quite quick question, I think. We need to issue our invoices for our second term school fee now. We usually do it at the beginning of November. Do you advise us to add the 20% VAT on the fees?
Well, when you say add the VAT, I mean, clearly you're going to have to account for VAT on the income. So Whether you show VAT separately or not is another issue. But you're going to need to account for VAT. I think the point is, if you expect to receive £90,000 worth of income after issuing the invoice in the next 30 days, you have a liability to register for VAT from the day you issue the invoice.
Okay. And linked to that as well is a question about how VAT is referenced. So the invoice, does the invoice just show a gross figure, or does it specifically reference the VAT?
It doesn't need to specifically reference the VAT because you are not dealing with taxable persons, but most schools are choosing to show the VAT in order to demonstrate to parents what the actual VAT cost is. There are certain issues, and there are certain issues in respect of tax points relating to invoices and receipts of payment. Most schools' accounting systems are on the issue of the fee note. And I think for in many cases, it will be difficult to change that. So given that most parents will pay within 3 months, i.e. within a VAT period, I think you should continue accounting for income as you've done previously.
Thank you, Steve. I've got a question for Nikki here about Xero and the finance system not allowing VAT codes.
Thanks, Susie. I think that's probably one that I'd need to take offline. Can I come back on that one?
Of course. I've got a question about a dummy implementation plan that we can share. We don't, unfortunately, but please do contact us afterwards, because we have, it might just be that we can look at what you're already using, and you've already got it, but just contact us afterwards. So a question here about VAT registration. We charge, actually no, it's not, it's about other amounts that are due on fees. We charge parents a £200 registration fee when they first register with the school. We charge an acceptance fee when the parent accepts a place for their child at the school. We have heard but cannot find written guidance that VAT is chargeable on these registration and acceptance fees from the 29th of July rather than the 1st of January. We thought that the registration and acceptance fees tax point would be the date of the date the administration service was performed, rather than the date the pupil starts at the school. Please advise if this is correct and where to find the written guidance. Steve, are you all right to take that one?
The tax point has been accelerated by the receipt of the payment. So that's called an actual tax point, which overrules the basic tax point of the time of the supply of the service. So essentially, in view of the anti-forestalling rules introduced on the 29th of July 24, any payments which relate to the term commencing the 1st of January have become taxable. The tax point is the receipt of payment. The law was introduced on the 30th of November, so 30th of October, sorry. So in a sense, if the payment was received after the 30th of October, the tax point is that date of receipt. So if you're not registered for VAT, you don't have to pay VAT on that income if you're not going to exceed 90,000 in that month. If you receive the money between the 29th of July and the 30th of October, the tax point is the first day of term. And so clearly, any receipts between 29th of July, 30th of October, you will have a liability for VAT because you will have to register no later than the 1st of January. So tax point is the receipt of payment, just as it was, to be fair, for fees in advance.
On fees in advance, there was a question here. the example about spend on classrooms being fully recoverable, is this the case if you have fees in advance? Where you have fees in advance exempt for this year, wouldn't educational spend go into the partial exemption? Stevie,
Yeah.
all right if you answer that one too?
Yeah, I've got it. It's a good point, Natalie. You're right. Fees in advance will have an impact on this. So you do need to take that into account. You do look retrospectively as well as you looking forward. But what I would say about it is that you may never need to include the fees in advance in a partial exemption calculation, because your VAT periods now are based on the income in the current quarters. I assume that all the fees in advance would have been before the 29th of July, so they would have hit those quarters. So you need to have a look at it in the context of your VAT year and decide what sort of impact it will have. And you will have heard of the override, and that doesn't need to be considered to the VAT year end. So if your VAT year is end as is the 31st of May, you don't need to consider the override yet. But you are quite right in the attribution of expenditure to income. Fees in advance will need to be taken into account.
Thank you, Steve. A question here about international agents fees. If we are already registered for VAT to account for international agents fees, but have never reclaimed anything, can we perform the 4 years for goods, 6 months for services reclaim once we start a full return in January?
No, not unless you registered for VAT in the last 4 years and you want to correct your first VAT return because you did not do it. It's pre-registration rules in respect of goods and services, 4 years and 6 months, etc. So no, but if you registered for VAT in the last 4 years, you could have a look at whether you claim the correct amount of VAT on your first VAT return, and you can correct that. There is an error correction procedure, which is actually also for the last 4 years.
Thank you. It's not simple, is it? Lots of questions here on meals. I've got one, is breakfast that's optional VATable?
Is it in a boarding house or not?
We don't have that. If it's optional, you would assume not, I would think.
Yeah, absolutely, Susie. If it's optional, it's definitely not VATable because it's closely related. If it's in a boarding house, it's VATable.
Okay. Steve, a lot of these are coming your way because a lot of people were interested by your sports exemption points. Can you add further information regarding the sports exemption? We rent our sports facilities out of hours to local sports clubs, but some are not registered charities. Is there a global exemption for sports lettings, or only if the individual is a beneficiary or to a local charity? There is definitely some confusion on the guidance.
There's been a lot of litigation on sport, and this was covered some years ago now, and most schools that I'm familiar with have managed to sort this out. Essentially, where you provide sport in a non-profit making environment, the supply of the facilities, maybe the pitches, the swimming pool, or any coaching or refereeing or umpiring or lifeguarding or whatever, is exempt from VAT. The reason being, the law was written this way to exempt from VAT sport provided to individuals, families, unincorporated clubs, etc. So the exemption is wide, and you don't need to worry about the block bookings provisions that some of you have also mentioned in the questions. The block bookings provisions are largely redundant in this situation. But in order for the exemption to apply, the supplier must be an eligible body. The school will be an eligible body because in most cases it will be a charity. If you do it through a trading company, the trading company must also be an eligible body, and it must have certain non-distribution clauses in order to be a non-profit making body. The only time sport will be taxable is if it's on a commercial basis. So if you're providing it to a professional sports club and they're exploiting your facilities for their own benefit, I would say that's taxable. But in most cases, it will be exempt.
Thank you, Steve. A question on bursaries, which is something that we haven't actually discussed today. The question is, my understanding was that bursaries were exempt if they were above 90% and therefore will impact your partial exemption calculation. I heard rumours that this may not now be the case. Are you able to confirm? I wasn't sure that it was exemption, but Steve, could you answer that one?
Well, it hasn't been covered in the recent guidance. It seems to have fallen off the agenda. But it's another area where I'm saying to schools, don't worry about it too much. I mean, firstly, you have an argument that it is business anyway, because you're actually providing it in order to generate more income for the school in the long term by attracting more pupils. But if it is non-business, and there is an argument that it is non-business because you're not going to get any fee out of it. This is 100% bursary, by the way. We're only talking about 100% bursaries here. We're not talking about lesser proportions. If it's 100% bursary, the worst that can happen is you have a small non-business disallowance. So how many 100% bursaries do you have to the number of pupils you have in the school? I suspect it's a very small percentage. So your exposure on non-business is very small. It's something to look at. Don't deny that. It's something to look at. But I don't see it as a big issue in the context of where we are at the moment in respect of all of the other issues.
Thank you, Steve. Nikki, I've got a question for you. Do we set up supplier VAT codes on the purchase ledger or nominal ledger? And is it by supplier or by invoice or by item?
Thanks, Susie. I feel the answer is that there is not a simple answer, in that it's going to depend on your finance system, because they are each have different structures, but also on your own system setup and how you're processing supplier invoices. So largely it depends, and perhaps it's something I could take up separately offline.
Thanks, Nikki. A few questions about the end of the VAT year and when you might want to do this. One question is about wanting to align the end of the VAT year with the end of the financial year. And also a query as to why, Steve, you suggested the 31st of May. So can I pass that on to you?
Well, a VAT year will always end on the end of a VAT period. So your VAT periods will end either March, April or May. Most schools have set up their VAT periods to end at May because it matches their financial year end. So that's why I say it's mostly the 31st of May. You can change the VAT year to match your financial year to the 31st of August. So if you've done that or wish to do that, you'd have a VAT year from the 1st of September 24 to the 31st of August 25, and that might well be more favourable for you because you've got more taxable income than you have exempt income in that particular VAT year, so you're going to get more VAT back. There are some downsides to it, and as you don't do your capital goods adjustments at the end of the VAT year, you do them 2 periods later. So if you've got capital goods adjustments to do, you're not going to be doing those to what, February, March 26, if you've changed your VAT year to August 25. So you need to consider it in the round. You can do it online, I believe. I think you can do it online. But bear in mind, you need to look at where you are at the moment and whether you've been doing partial exemption and you know when your VAT year ends.
Brilliant, thank you, Steve. An interesting question here. Parents paying late who are debtors for education that was received in 2024, are they going to be charged VAT?
Are they going to be charged VAT?
Yeah, so their fees were due before this came in.
No. I mean, so that you revert, so there's no tax point has been created if they've not paid, and I assume you wouldn't have issued a tax invoice. If you've issued a tax invoice, you have a liability from the date of the invoice. So no, you will not have to pay VAT on debtors if the education was supplied prior to the change of law and the payment relates to that period.
Fantastic, thank you. A question about music lessons and extra tuition. If these are optional, should they be exempt? Now, I suspect you need more to consider more factors than just whether they're optional, but Steve, can I also ask you to answer that one?
No, I think they're taxable because it's still education. We're not looking at the sporting exemption here. We've only talked about the exemption in the context of sport and closely related goods and services. It sounds to be part of the educational program and would be taxable. Some schools are looking at their pariahs providing the music independently to the pupils, and that's another issue in itself. And I'm sure some of the larger schools who've looked at this before are familiar with that issue.
Thank you. So it partially depends on who provides the tuition.
Yeah, who is supplying the service? Is it the music teacher to the student, or is it the school to the student? And like all of these things, Susie, it depends on the facts.
Yeah.
Depends on the agreements between the various parties. And it's another area where some planning might actually be useful.
Thank you. If you run a holiday program during Christmas, Easter and summer holidays, what criteria do you need to meet in order to be VAT exempt? Specifically trying to be exempt.
So, well, you'd look at the facts of the situation. Clearly, if you're looking for a care and welfare position, what are the qualifications of the people providing the care and welfare? Do they have care and welfare qualifications, or are they teachers? What safeguarding rules do you have in place? If you're doing it through a trading company, is the trading company state regulated in order to provide care and welfare? It will depend on the facts of the situation, but it is recognised that holiday clubs do fall under the care and welfare provisions, so you are looking at exemption. You just need to back that up with the facts of the situation.
Would that change, Steve, if the clubs offered tuition and coaching?
Well, it could do, but in terms, as I said, we could have a complete webinar on the care and welfare provisions themselves, because we haven't really touched on them. And I do think this will be an area of dispute with HMRC. The question is, what is the major supply? Is it education or is it care and welfare? And if it's care and welfare, the whole supply under the single supply rules will be exempt.
Yeah, it's really interesting. And that was mentioned in the guidance, wasn't it, specifically?
Yeah. The HMRC accepted if the major supply is care and welfare rather than tuition, supply is exempt. So if you've got a day or 24 hours of young people, children being on site, and you've got tuition for 2 hours, well, the predominant supply is care and welfare, isn't it?
Well, we'll have to look at the facts, but thank you, Steve. A question about fees in advance schemes going forwards. So fees in advance schemes that include VAT on the amounts that parents would pay in a lump sum. The VAT treatment of the VAT that's added to those fees when the school receives it. And then also what happens in a situation where that pupil then leaves earlier than expected and those sums are refunded. Steve, could I ask you again, please?
Is the question more about what's the position in respect of a refund?
I think that's the second part. So the first part was when the fees in advance lump sum is received that has a number of terms VAT added to it. Presumably that's accounted for in that quarter. But then secondly, the refund question.
I think it's more of an accounting question then.
Okay. And then, but then in terms of the refund?
Well, if it's an accounting question, and I think schools account for VAT on the term in which it's received, you're going to have to make an adjustment. So your tax point is the receipt of the income. So you have a liability in that VAT period, but your account treatment might be different because it will relate to future periods. So you're going to have to do an adjustment for the income you've received for those future periods. In other words, you're going to have to pay VAT on it in the period in which it's received. The following period, you do the same adjustment, but you reversed your first adjustment, so you don't count twice. So you're going to have to do a manual adjustment in order to match up your accounting with your VAT. In terms of the refunds, well, it will correct itself because you'll reduce your taxable income by the amount of the refund. So you'll essentially get a VAT credit for the refund. So yeah, you'll get a VAT credit when you make the refund because it will be a negative entry into your income.
Brilliant. Thank you very much. So where boarding fees are very optional and much more welfare and food than tuition or education, why would they not be welfare and exempt fees, especially if they're separately charged?
Well, because the legislation taxes them.
Yeah, I think that's the same question we've got again, which optional flexi boarding, would that be exempt? I think the answer is that it's in the legislation.
Well, just looking at the legislation now, the provision of board and lodging, which is closely related to a supply of a description falling with item 1, which is education. So that any provision of board and lodging is taxable because it's an exception to the exemption. Essentially, the exemption is what we're looking at. Private schools are an exception now, but the provision of board and lodging, which is closely related, is taxable. So if you provide that, whether it's optional or not doesn't really matter.
We have a question that's to do with the timing of deposits. If a deposit is received now or in 2025 for a pupil that started many years ago, would VAT apply to that deposit?
Well, it depends on the terms of the contract because some deposits can be tantamount to advance payments. If it's a genuine refundable deposit and the normality is it does get refunded, it is not VATable because it's not a payment for a supply. But it can be, depending on the terminology and the actual contractual situation, it can be an advance payment because the school can take it as an advance payment. And if it's an advance payment, it's VATable.
Thank you. Another question about registration fees is for a child who is going to enter nursery. I think this is on the assumption they enter nursery, then they carry on through. That will be exempt. What rate of VAT should be used on that registration fee?
First supply is exempt, so I would exempt it.
Great. And registration fees, if you've already received them, you wouldn't be expected to go back to parents and ask for that VAT liability.
No. I mean, you've received the fee on the basis that what you're going to supply to them is an initial exempt supply. And so the liability of the fee cannot have two, the registration fee cannot have two VAT liabilities. It will have one VAT liability.
Mm-hmm.
And on the basis of the first use, I would say it's exempt.
Thank you. A few more short ones. Will VAT be chargeable on fees in lieu of notice?
Will VAT be chargeable on fees? Sorry, Susie.
So where a pupil is withdrawn without the appropriate full terms notice, quite often the contract provides for a full terms fees to be due in lieu of notice. So it's the parents would still have to pay the terms that aren't attended, which sounds like they would have to pay VAT on that because they would be the fees that are due.
It's an interesting point because compensation is not normally VATable because it's not in return for a supply. But HMRC have looked more recently to tax those sort of supplies. I do think, though, there is a possibility that it might not be VATable on the basis it's compensation. But we keep coming back to the facts, don't we?
Yes.
We keep coming. What does your contract say with the parents? These are going to be important issues going forward because it'll depend on the facts and why VAT is so perplexing to many people is because it just depends on the circumstances of the arrangements. And we could have two schools doing very similar things where we could have different issues arising, different liabilities, because contractually with their contracts with the parents would be different.
Yes. Thank you. Another question on timing. If we register on the 1st of December 24, then when will our end of first year automatically fall? Will it be the 30th of November 25 or earlier? And this is with a particular focus on capital goods scheme reclaim.
When you register, you tick a box saying which VAT period you would like. So if you tick 31st of May, because you can only tick March, April, or May. If you tick 31st of May, it will end on the 31st of May. So it will not be a full year. It will be a partial year from November to May. You can change that, as I say. So you could change that to August, and then you'd have to be careful that you didn't have a short period, first of all, then a longer period, particularly if you were trying to wrap up significant capital goods costs. So, I mean, I think the point is you will have exempt income in November and you do not want that in your VAT year. I'm assuming you're going to want a large level of recovery on your capital item, which you'll incur next year. But yeah, I mean, I think that there may be merit in changing your VAT year to the 31st of August whilst you register. HMRC can refuse it, by the way, if they see it's for avoidance purposes. But there we are. I mean, I can't guarantee they will accept it, but you can change it.
Thank you. Another question about registration. When considering whether the VAT threshold has been breached in the last 12 months, should zero-rated home to school transport be included?
Yes, if you're saying you specifically charge it, yes. But if you're in a position whereby the majority of your income is zero rated, let's say, for example, you've received 100,000 in zero rated transport and 10,000 in other taxable activities, and you would therefore be in what's called a net reclaim position. You can ask HMRC not to register you from the date when you exceeded the threshold, because it's in their advantage that you don't register.
Thank you. Invoicing for the spring term. How would you advise dealing with invoicing in December if we haven't got the VAT number yet?
The VAT doesn't matter. The VAT number doesn't matter. You don't need to put it on your invoices. As I said earlier, you're not dealing with taxable persons, you're dealing with parents. So I would just include an inclusive amount on the fee request and put some footnote along the lines of asterisk including VAT at the appropriate rate.
There was a quick question about one-to-one support during school hours, so one-to-one tuition, whether that would be vatable. Because it's one-to-one, does that have a different treatment?
No, unless the teacher is self-employed and is contracting with the parent directly, such as a Perry, which you mentioned earlier.
Mm-hmm. Thank you. They're still coming in thick and fast.
We've only got 3 minutes.
Oh, we do. So one last question. Oh, the pressure. Oh, so going back to that question about registration for nursery fees, does that mean that schools will need to have 2 different registration fees, one for nursery starters and one for all other starters?
Well, no, they just tax one and don't tax the other. I mean, if you're implying that, do you need to charge more for taxable? Well, you do need to pay VAT on the taxable one and not pay VAT on the exempt one. So you may choose to charge more, yes. In other words, passing some of the VAT costs, if not all of the VAT cost, onto the parent. So you may well have 2 different rates. Thank
you. I think that is probably where we're going to. Oh, we do actually. No, we do have time for one more. Let me just try and find one more. Does it make a difference if teachers run the holiday clubs? So I think we're talking about those summer and Easter clubs. If it's school staff that are employed.
No, it doesn't make a difference, but you will at some point need to demonstrate it is care and welfare and a holiday club. So why are teachers running it? What's the reason for that? What does the contract say? What activities are actually taking place? Is there tuition? So it doesn't make a difference, no. Your starting point for a holiday club would be care and welfare. Your issue is what level of tuition is taking place during that period of care and welfare.
Thank you. I think we are going to call it a day there. We will have a look at the rest of the questions and come back to you on those. But for now, just thank you very much for your time. I hope that you found it informative and have a good day. Good luck. Stay strong.